Got it. Um, okay, can you guys hear me okay? Well, all right. Well, then you came to the right place today. We're gonna help you beat her. Because that's no beat her credit score. No, definitely not. But that's where I was going with that is, um, so how long ago did you guys apply? Oh, can you guys hear me okay? Okay. How long ago did you guys apply? How long ago did you guys apply for the cars? Or both like you and her? Did you apply, Will? No. You guys evidently can't hear me. You can? Okay. I was just asking Will, how long ago did you guys apply? 7 days. Oh, okay. You just did it. Great. Because the only thing would be if she and I assume you guys applied separately. Okay, good. Okay, and then yours are okay. Well, either way, yours would be. I would recommend we do yours a little. Well, that's why I like Fund and Grow because they could tell you. I've heard. I remember talking to them. They said like wait 90 days, and then you could go reapply for Chase or a different one if needed. But you can actually go apply for another round. So, but you guys are already doing it. That's awesome. So you guys are ready to deploy. Okay, so well, that's really good. Carolyn and Landon, we could do that in this sort of second half of the call. Would you guys? Okay, is anybody comfortable pulling up their credit report and talking through it as an example? If you're not, don't, no one. This is not a pressure thing. Or I could just do mine, but if it's volunteer, what's that? Yes, perfect. That's okay. We can do it one on one as well, but uh, you don't have any. And we need. Oh, that's the only thing is like, yeah, you can't really. I could help you kind of get it logged in. Well, we'll show you how to use it on Experian. Well, how about this? Why don't we get you guys to apply and not apply? You guys just set up an account with Experian. It's free, and then I can look at it one on one with you guys, and then we can kind of I can give you some feedback on it. But let me show. While we're waiting on Will, I'll just because I want to be the example and share mine. And guys, you this might surprise you. Mine's not going to be as picture perfect as you said. It's going to make you feel better, Will. But I don't ever sweat it because I'm using it. Like, and mine will fluctuate. Mine, I've even been in the 600s at times when I've got a bunch of credit cards, in use, and then it'll bounce back to 780. I've never been above 800, but then again, I've always had some sort of balance that, or when I say balance, it's like I'm still paying the enough to avoid interest, but I still carry a statement balance. All right. Let's see if I can get this to work. Oh, no, okay. So guys, really quick, you just go to Experian.com and you can go create a first. You have to verify yourself, and it's going to ask you a bunch of security stuff. But once you get in here, I'll just give mine as an example. Okay, 476. And I'm not going to give any of my social, any of that stuff, because this is recorded. But I can still share with you guys like how I look at it. And then if we get wills, we'll analyze wills and show Will how he can get approved for more than Mira, not beat her. We'll say. Okay, so and always again, I don't ever do the membership. I just do the free one, right? Because you can get a free membership. No, keep my or if they're always going to ask you to upgrade. Can you guys see my screen by the way? Okay. Holy cow! Wow. I'm serious. I was expecting I was going to be somewhere between 700 to 725 was going to be my guess. Um, but just because I'm always using it. But let's go to credit reports, right? So I'll be able to go pull up my Experian one. So you can always get your Experian one for free, and this is updated as of today. Okay, so very good. Um, So this is where you start to look in it, right? The reason why, and it'll tell you why my score is a little bit not like 800, but um, let's see. Like this one, this okay, we're at 38%. This is the usage, and I might even tell you. Like a lot of times these credit card companies want you below 30% usage. So if I was below 30%, I would probably shoot up to like 780. Um, but you can see like some of these, this has a balance, right? And then the cool thing is it'll show you card by card, like which ones are over. But they also say like you shouldn't have a single, if you really want to maximize, like when I went through Fund and Grow, they basically are like, make sure that you don't have any credit cards over 30%. But check this one out, right? Like my Home Depot card, it's at 49%, but it's 0%. Like this is always the one that kills me because my Home Depot card is always like, I'm always using it. I've got a $70,000 limit, but I'm using 34,000 at 0%. So technically, if I really wanted to get my highest or best credit score and get approved for the most, I would pay that down to 30%. So I just do what is 30,000 times 70 or 30, sorry, 30% times 70,000. And that would tell me what balance I would want to carry. Okay. Um, and then I've got a couple like mortgages. These are the only mortgages, FYI, guys. These are the only ones I have in my personal name. The rest of them are in LLCs. So all my LLC loans don't show up other than those three. Um, anyway, and then it shows you ready? Cool. I'll go to you in a sec. Yeah. And then the last thing is I'll just, this is the other big one is inquiries, right? So I had to get my credit pulled in July. This was for a loan, a commercial loan. And that's another tip I try to do is I try to apply for all my loans. Okay. Perfect example for Will and Mira. Like I'm going to try to have them when they, like I'm right now setting them up with a couple of banks and I'm going to have them pull, excuse me, pull their credit all at once, like all three of them, ideally the same day or within a couple days. That way he'll have a bunch of inquiries, but then after like 90 days, they start to fall off and they don't hurt you as much. But I think that was the main stuff I want to show you guys. But you can see the other, you could also pull all three reports. But that's sort of the big things, guys, is you just want to keep this usage out below. And these late payments kill you, right? Like this one, like I didn't get notified and it was going to another house and I was so mad and I tried to call them and get that late payment reversed. But anyway, but just to show you it happens, right? I've got whatever, like 8 credit cards here. It happens. All right, let's go ahead and do yours, Will. Oh, no, we lost it. But before we go to Will, any questions for you guys, Landon or Carolyn? Go ahead, Will. What's that? Oh, I'm not sure. Yeah, if you want to share your screen. Evidently, Will can't hear us. You guys can hear me though, right, Carolyn? Okay, must be Will's. Mhm. Okay. Okay. Cool. The other thing, Will, can you hear me? Okay, go ahead. You want to share your screen? And while he's doing that, Landon, you should go ahead and do the same. If you can go create an account on Experian while we're doing this, I would just create it. That way you can start paying attention to this stuff because it's huge. Okay. Oh, which is Chase. Chase does it, huh? I didn't know Chase does it. All right. So, okay. Okay. Yep. Did they approve it? Did they approve the Chase one? Okay, good. Was it a business one or a personal one? Okay, nice. Good. Or your LLC, like your LLC. Good. Good. Hmm. Okay. Got it. Yep. Mm-hmm. Yeah. Yeah. Ooh. Yes. Will, awesome question. So, and I've talked to a lot of guys who do this at scale. Like even like Rhea Campbell, I've had conversations with her, and it's this constant money in, money out. And it's funny. It's like I thought I was the only crazy one that like with our fix and flips, money coming in, money coming out, and just always trying to keep up with it and plan. She's like, oh my gosh, it's even worse when you're a hard money lender or private money lender because you're trying to be able to they be there for your borrowers, fund when they need you, and then you're waiting for the next guy to pay you back, and it's this whole thing. And so no, it's really, I mean, even the bigger people that do it struggle to yeah have like a consistent pattern. But what I would recommend, Will, is like you just try to keep as much of it deployed. I mean, the name of the game is keeping it deployed as much as you can at all times. And here's another example I'll share. So I was talking to Matt Sorensen when I presented on Dealmaker, and I was telling him about our deal where you could keep the money working and it's secured and it's going for the whole year. He's like, man, I don't like, yeah, you I could go lend out on a deal here, a deal there, but like then they pay me back and then my money's sitting idle. He's like, I just want to put it somewhere where it keeps accruing, right, and keeps going. So anyway, that's the big name of the game is just keep it going. Yes, you could go chase the 30% returns and going to take more risk, right? But also, if you go do that and then you get it back and then you're waiting for the next one and then just also the time to underwrite it each time. So yeah, the name of the game is keep it. Go ahead. Yeah. 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 Yes. Yeah. Yeah. The whole yeah compounding interest essentially. Yep. Yes. Okay. So, Will, I've got an idea. We'll talk more offline, but because here's the other concept, right? They've got, let's just use Will and Mira. They've got 130,000 approved, right? And what, again, you don't have to have 130. You could have 20K approved. But my thought is, I could go. Well, you can either go because have you looked into the cost to convert it to cash? Is it like 3 or 4%? The cost to convert that to cash, it's usually like 3 or 4% to cash advance it. Upwards of five. Okay, boom. So they could go convert it to cash, pay five. Here's what I want to propose, Will, and it's the same thing I'm doing with the Revive Club. Is we're doing we I do man, we spend so much on credit cards with having like 5 to 10 flips going, and my contractors like always at Home Depot, always buying stuff, paying subcontractors. So my thought is whether it's me or find someone else that can just use and it's here's the thing is it's I don't know anyone else doing it because manage the management part of like not only getting that credit card and getting it to my team so they can use it. But long story short, I think I've got a way to where we don't have to go convert the 5%, save you the five, and make that, and then get me something competitive to where I can. My thought is I can keep it working for whatever the 12 or 18 months on my fix and flips, and then make a return on it, and then we don't have to convert it. Does that make sense? Yeah, that's you could actually totally do that. Yeah, yeah, and then I could just get an extra card. Yeah, that's so that's what I would like to do. Yeah, I love that. No, I was just gonna say I love that because I'm doing the same thing with Revive Club. Revive Club is applying for credit cards under the Revive Club LLC, and then those cards are being deployed on my fix and flips, and it's giving them like track record, and it's helping me. So, for example, we're only paying 5% on those, but those people are able to they're making 5% on their credit. They didn't come up with any cash. So, I think let's find a happy medium on a percentage and keep it working, and then we'll just keep it deployed and yeah, use it on some fix and flips. So my thought is, Will, just knowing your situation, like I could probably do that, and then you could save the other cash to go diversify, whether it's buying a rental or being a hard money lender on something else. You know? Yeah. Well, they're in the LLC's name, right? The credit cards. Yes. Hmm. Got it. Okay. Um. So the quick answer is, I haven't figured like I've tried to get just business credit in my LLCs that I've had for quite a few years, and they're doing lots of volume. They're doing have a lot of revenue coming in, and they still want me to like even my loans, like they still want me to personally guarantee. So I have not found a way to where I don't. So to be clear, what Will's saying is the credit card's in his it's in his LLC's name, but if it were to default, it would impact his personal credit, and he personally guarantees it. So I have not gotten to a point. I think your business it has to be a massive business, but at the end of the day, banks don't like it's unsecured at that point, unless you want to secure it with a property that your that it property that your LLC owns. You know what I mean? But I don't see it's just hard to get around. I know some people have built up their business credit, but it's a long game, and I haven't even quite cracked it. Yes, yes, absolutely. If you haven't done the DMB number, start to do it. But I just haven't. And granted, I haven't invested as much time, but I don't know. I've just always gotten pushback when you're trying to be like, you're gonna basically have an unsecured loan against your LLC. And again, unless your LLC has a bunch of assets that they can collateralize against, they just don't like to do it. But there probably are some that do it, but it's just less and less. But it also could change, right? It's based on like the lending environment. If like all of a sudden there's all this money out there to go lend, then they get more aggressive. But do the D&D for sure. Yeah. So do the D&B for sure, Will. But I don't see anything immediate that's gonna let you start leveraging. But I think you're doing the right thing. You gotta. I'm still doing the same thing. I'm getting credit. I'm at the end of the day, I'm still having to personally guarantee. Cool. Sweet. We'll talk off. Yeah. Well, we'll talk offline about how to work the credit card thing, and then also the other thing, guys, too, I did with Will, just because he's him and Mira are ready to buy a couple properties turnkey. Is what we're doing is they're buying some properties. Actually, you guys walked. I know Carolyn did. She walked that one in Rock Springs that had the weird floor that was about to sink in, right? So we're starting that renovation here in the next couple weeks, and we're going to completely renovate that one. What's that? Yeah. Yeah. So what we're doing is our team's going to fully renovate it, and then what we'll do is we'll sell it to Will and Mira as the plan on the back end. But what I do is we write a contract for about 30% more than the what we're trying to sell it for, and then the bank will give us 75% of that number, which essentially, if as long as it'll appraise high enough, it'll allow Will and Mira to get into that deal with like very little money down, and we're hoping to do no money down. It's probably that would be a home run, but we're hoping to just have it be a small amount. So anyway, I'm introducing Will to several small banks and also a couple mortgage brokers so we can kind of see what'll give us the best rate and best terms. Mm-hmm. Yeah. Well, yeah, very, yeah. Fractional is one good way to do it, but it's a lot of work, as I found out. Um, we also the thing is when you become yeah, it could, yeah, there's a way to do it. There's especially, and now I know several different tools to do it. So let's look at it. And the other thing, Will, I like too um, is I love is because you brought up at the beginning of the call, so I want to kind of address that one. Like, all right, now how do you get a pipeline of deals to do? I have been talking to a lot of people who raise money, or even guys who have like a lot of money to deploy. And I'm like, I want to build something where you can start lending in second position, but do it sort of at scale. But it's all based on underwriting. So, because a lot of people won't lend in second, um, because it's not a cookie cutter way to lend, right? But I think it's a big, especially in sub two. There's so many people who need to be lended money in second position, and if you underwrite it correctly and do the right due diligence, like A, you can make a little higher percentage, and then B, like I would lend it all day on stuff in Wyoming, Montana. Because here's the thing: if they default, you take back the property. We go finish it. I go finish the job, and I make more money if they default, right? Kind of like James was saying, and back at the summit about lenders that do that intentionally and try to. They're basically predatory lenders that are trying to get you to default so they can take the property. Yeah. Oh yeah. Yeah. Um, Go ahead. Hmm. Oh, I agree. Okay. Yeah, let's keep the conversation going. I One quick thing is the first is a very competitive market. There's a lot of people in there, and and it's just bigger sums of money. Like I just like second because, and to be clear, when we're second, we're going to be behind a bank or a sub two loan or something, and just underwrite it correctly to where it's like it's really cheap money. Like I like when you have cheap money in front of you, and then you come behind it with higher priced money, like 3% in first, 10 or 8 to 12% in second. And that way, but we structure the deal good to where we know that if that borrower defaults, we take it over. So anyway, I've got some ideas for that, Will. I think that'd be really cool. And the only the only tough part is where we're at now is like I can do it within my fund with oh man, but you guys are also yeah, it's the accreditation part. Um, you can also set up an unaccredited fund is the best way to do it if people are passive. Um, but anyway, I've got some other ideas on that as well. So that's the only thing. It's an SEC regulation that you got to be careful of because if you just got a bunch of people together and they weren't technically passive, that's when you can violate like securities laws. But there's a way to do it the right way. So I like it. Hmm. 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 Yeah. Yep. Yeah, I got lots of thoughts on that. Let's run at that. I like that, Will. Um, cool. Awesome. Well, we talked a lot about credit and liquidity. I'll help Landon and Carolyn on theirs. And then and Carolyn, we might even, if somebody wants to after this, we could even, I've got the link. So good news. We actually have the link for Chase to start the Revive Club application. So I was going to let you guys be my guinea pig if you want. But we can do that on a offline one-off basis. Um, what's up, Anthony? Let's welcome in Anthony. Good to see you, man. Tony, what? I know you're. I'm going to summarize, but tell me what's on your mind. What can we let off the call with everybody sharing kind of either some sort of win and also where they need help. I know you're big on hey, you want to get involved and kind of help us out on some of our sales stuff, but where else do you other than that like where do you need help, Anthony, to kind of get your get your plane off the ground and flying? Nice. We lost you. We'll give you a second to come back. Anthony, just hop back in when you come back. Well, we can see you. You want to try it again? All right. Well, Anthony's getting his connection restored. Landon, also, I wanted to give you some time to walk through a deal. You guys want to walk through like a underwriting a deal that Landon's got and see how we underwrite it? Would that be helpful? Cool. Let's do that while we're waiting for Anthony to come back. All right. Which you want to do the revive one, or you want to do the co living one? All good. Anthony, go ahead and Landon. Why don't you get them both ready? We'll walk through them. And I think if you emailed them to me, maybe email again and I'll run through them. But go ahead, Anthony. But you can finish if you got a good connection. All right, he's going. Landon, you're up, dude. Let's go through. Did which one did you email any of them to me? Okay. Why don't you do that? Or do you have it kind of summarized? Have you run it through the ChatGPT underwriter? Okay. Whichever one you have, let's run through that. Sweet. Gregersen Properties would be best. While he's pulling it up, Carolyn, I know you're listening in, like you know you're a sponge, soaking it in. But anything you've popped up, you've thought about, or cool? Yeah, they can. Let me. They can also help scrape some of that. Yeah, yeah, they can. Hmm. Wait, you said your credit's great. You said seven what? Seven? Holy cow! That's better than mine and Will's. You got the best credit on here so far. Um. Okay. Okay. So let's get this straight. You don't have to have an 800 credit score to like do this stuff. Like anything over 700 is great. Like you can still get approved for stuff at under 7. Like 650 to 700 is starting to get the lower end, but that's phenomenal. Um, inquiries. And have you gotten turned down for a card because of inquiries yet? Okay, cool. So, Carolyn, you could. Okay. And what was the one before that? Or is that the first stuff? Okay. Got it. So Carolyn, yes, the quick answer is, and this is a good use case for Fund and Grow, is they will help. I don't know how they do. I forget they explained it, but they help kind of scrub your credit, meaning they get those inquiries off, right? And I don't know if they can get them off if they didn't set them up because they're very strategic in how they apply, and then they get them scrubbed off, and then they apply every 3 months and just keep getting more and more money. So just to recap, guys, there's like kind of three ways to do it. You could do what like Will and Mira did, where they just went it on their own. They didn't have to pay any money. They just went and applied and worked with the Wells Fargo folks, and they got approved for a really good limit, and they didn't have any cost, right? Option two is Fund and Grow, where you pay to 3,000, 3 to 4,000. They're going to hold your hand. They're going to do everything. They're also going to be the best at it and help you get approved for more than probably anyone else. But you're going to pay 3 to 4,000. The other option is I have a third one that I've just been working with these guys. But because Fund and Grow, you're going to pay to 3 to 4,000 up front, Carolyn, to do it, and it's going to take a little bit of time to get going. This other group, they just take like 9% of everything you get, and that way you don't have to put any money up front. But the problem is you give up nine, so you're going to have to make at least nine with your money, or you're losing, right? So those are kind of three options. Um, yeah, I wouldn't. I would not. I would only recommend that if somebody's like got a really good deal and they just don't have any money up front. Um, but Carolyn, we might. Do you want to, after we wrap the call? Do you want to try me and you just one on one? We could try using going through the Chase one for Revive Club. I think you're right. Unless you're waiting for anything, I don't. I think, yeah, I think you're good. I would go with your based on your credit, and if all else too, Carolyn. Here's the other thing: is like they might come back and decline it and say that, and if they do, then at that point, I think we go talk to Fund and Grow or some. There might also be another company that can help us just try to get some of the inquiries removed, or they might just say, you know what, you just got to wait 3 months for them to drop off, and then you go again. Um, all right, cool. All right, Landon, did you forward it to me? It's probably all right. Okay, here we go. Let's do Revive. This is easy, easier. All right, and you already pumped it through the. But is this one you said was like a teardown? Okay, that's just not that I people do great on that. I sometimes struggle to see. A lot of times I pass on the teardown ones just because it's like, holy shit, if I'm tearing it down, I might as well just go be a developer. But there are, if it's, but unless it's like an incredible lot in like an incredible area and you were getting a steal. Really? What's the AR? So have you ran it through the underwriter? Okay. Okay. Um, okay. Here, all right. I got the hack for you, Landon. Have you called the agent on this one? It's listed. You did? So I would ask the agent, be like, hey, can you run? Here's my, have I ever told you this pitch? Right? Go to the agent, say, hey, I want to fix this thing up. I want to, you can explain the revive of like high level, but be like, before I go into all the details, what do you think if we put 200K into this house, what would it sell for? She should know it better than anyone, right? I always encourage you guys to do your own underwriting, but like use the local experts. Really? How come? She not very good with like, oh, well, with your agent. Okay. Um, well, okay. So long story short, I would go, but no one's under contract, right? Yeah. Well, you guys, everybody can see. Am I sharing? Okay. Well, guys, FYI, I'll just keep this moving. So, Landon, and just some of you guys maybe haven't been on Problems to Profit and seen this. This is what I've been sharing the last couple of weeks. So, this is a chat GPT, and I'll share it with the legacy people, obviously. more than happy. I'll share it in our WhatsApp group. But here's what all you got to do is you pop in the address, and then we just got to go figure out the loan amount, this mortgage payment. If you don't have this, we can estimate it. The ARV, which Landon mentioned. So sounds like a little drama with the agents again. Anyway, I would like go lean on an agent to give that to you. Like let them run it. That way you don't have to, if you're not as comfortable. The rehab, I know we're gonna have to estimate, but let's just, oh, well, I got an even cooler, better tool is I got this rehab estimator. So we'll actually plug that into my Estimator Pro. Another